What do we mean by proper asset allocations, or how to allocate investments in your portfolio? So proper portfolio allocation is essentially the investment mix in your portfolio. It's how much have we invested in stocks, bonds, and cash. It's really a way for us to incorporate everything from your individual tolerance for risk, your personal goals for your money, and your time frame for that money into the portfolio. You'll hear, for example, I'm a 60-40 in my portfolio. What does that mean? Well, that first number is always the stocks or the equities. So I've got 60% of my portfolio in stocks. The other number, the 40, is bonds and cash. We typically lump those together. And then there's some sort of underlying mix inside of there. But so how do we get to that number, or why do we get to that number? Well, we know based on those goals and that timeline or that time frame, we have some sort of performance goals. We have some sort of total return that we're expecting to meet those goals. So we can look historically at, say, a 60-40 and say, okay, does this historical performance meet the types of goals that we need? So that works to for the future, so the types of returns we're expecting. What it also does is help to incorporate your risk tolerance. So it eliminates those emotional urges or those impulses to maybe exit the market when we have these downturns, because we know that our allocation is correct. We know that we're not going to feel as much of a pullback, and we can still keep our focus on the long term and stay invested. It's really a fundamental building block for us to always refer back to. We know that over time, stocks will outperform bonds. So at some point, that 60-40 might be a 70-30. And now your risk is really out of whack, because if you have more in stocks, well, if markets pull back, well, you're going to have more risk to the downside. So we have that ability to rebalance and kind of use that as our foundation. And it's also a process that will evolve over time. Obviously, if you're younger, maybe you're in your 30s and you're just focused on growth, your risk in your portfolio and your allocations should be a lot more focused on the stock side, so a lot more focused on potential returns. Whereas maybe if you're distributing income and you're in your 70s and you need to be more conservative because you're concerned with protecting your assets, well, the focus should be turned probably a lot more to the bond side of the equation, so that we get that protection to the downside so we can still meet those goals. So hopefully that sheds a little bit of light on proper portfolio allocation, and we thank you so much for tuning in, and we'll see you again real soon.